Hello everyone and welcome to today's Trading the US Open Live here at the Live Trade Room. Hope you're all keeping well. Apologies, we are running just a few minutes late starting this particular session. Hope we haven't inconvenienced you too much, but just to give you a bit of background in terms of what this session is all about, we look for high probability trading opportunities where we look to identify the market conditions, have an understanding of the trend and look to trade the overall trend in these markets. And we have a bit of a process that we go through which involves the mastering of price action, understanding what's going on, which can give us the opportunity to identify really high probability trading opportunities. We then go through a bit of a process in terms of our ability to execute those trades, where we discuss that on an ongoing basis. And then, of course, your ability to manage that trade effectively will determine how much money you can make trading these financial markets, all with one aim in mind, and that's to make consistent, profitable returns. So that's what we look to do here at the Live Trade Room. So without further ado then, if I just share our risk warning with you, just please do familiarize yourselves with the risks involved in trading these financial markets. So that's currently there up on screen. Okay, so let's, before we begin, it's very important we do have a basic understanding of the news flow for the session. So let's bring up Forex Factory currently up onto screen. So there you'll see today is Thursday the 23rd of August. We're still trading summer markets. You know, I know we keep saying it, but it's important to acknowledge that that's the case when it comes to assessing market conditions. The markets are generally lighter and can be a little bit more choppy during these periods, a little bit more difficult to get a comprehensive grasp on certain moves. So this morning we were looking at some opportunities. We weren't able to execute any trades this morning. Patience is one of the pillars on which we can consistently trade these financial markets, and if we were jumping into these markets sort of needlessly, then all you're doing is eating away at your very valuable capital that you're trading with. So no need to do any of that. So hopefully it's a lesson in patience, if nothing else. Okay, so let's see what opportunities might exist for this afternoon. As far as the news flow is concerned, there's a lot of very, very minor news events that don't really generally impact any of these currencies. So the only major significant event for the day and also for tomorrow and Saturday, and we'll see the consequences of this probably early next week, is the Jackson Hole Symposium. So that's where all the global finance leaders meet to discuss who knows what with regards to global finance. The reason why we don't necessarily know is because it's closed to the media. But what we often get is politicians, central bankers, you know, speaking to the press afterwards, maybe giving them a bit of insight in terms of what was discussed, and that as a result has the potential to impact some of these markets. So if we're in a bit of a holding pattern or a bit of a if we're getting a bit of choppy price action, if we have to sort of commit lots of man hours to these markets, it might be worthwhile refraining from doing so. So these were the markets that we were looking to trade today, and as you can see, we were looking to sell the euro dollar below the 15.42. Didn't really get that opportunity, although it attempted to do so on a few occasions. The pound dollar, we were looking to effectively sell it below the 28.49, and as you can see, it literally became a supporting price for this market, as it did yesterday, ironically. And as we're currently above the 28.68, we have no significant interest in selling this market above that level. So you can see the sideways movement really in the pound dollar. Do we expect it to move lower? Yes, we do. If I look at it on the daily time frame, and we'll zoom in a little bit, tomorrow it might give us even better opportunity if we actually do break beneath these lows here that we've created we might see a little flush to the downside. So we're not going to take our eyes off it just because it pulls back, and we're currently hanging around at yesterday's low. So on a 15-minute time frame, this is the market conditions in which we're trading. We saw a nice flush down. In fact, the dollar sold off quite considerably actually during the, sorry, when I said sold off, I meant to say that some of the dollar pairs sold off, but what we saw is strength in the US dollar towards the latter part of yesterday, and again during the Asian session in the early hours of this morning. So obviously when we get to our trading desk for the European Open, we've seen and experienced a lot of the no-brainer moves that we would ideally like to trade, which is we did try to take a trade in this yesterday to push lower, but obviously and just to analyze yesterday's trading, the analysis was correct. The timing, obviously we needed to be a lot more patient than what we were to get into those trades, but it's a good lesson to be learned that quite often we can get the analysis correct, but it doesn't necessarily mean to say we're going to make money off it, especially if the markets want to move during fairly inactive time periods when we're obviously not at a trading desk. So, and that's what happened really since yesterday. There's a lot of political sort of wranglings going on in the US with regards to Donald Trump and the situation with his former lawyer in terms of paying off women, and who knows where all of that's going to end up. But clearly it provided a little volatility really for the US dollar yesterday. It was largely sort of politically based, and of course there's rhetoric around global trade wars with Europe and China, and that's all really causing a bit of hesitation in the US dollar. However, we did get technically the break, but we weren't at our trading desks to be able to capitalize on that, unfortunately. And today we haven't really seen a follow through to the downside either, so that's why we were able to effectively stay out of these markets and allow it to do its thing. Now we have had a strong bounce off the low to roughly the previous level, and we got a strong rejection. This is a bearish engulfing candlestick at this price action here, and if we go down into the smaller time frames as well, you can see the thrust lower, the poor attempt to break higher, and then the actual rollover of this market to the downside. The problem we have from a consistency perspective, if we're looking at the pound dollar, is that we are above the daily low, and generally we prefer to sell it below that level because it's very likely to provide support if price comes down to that level, and very likely to see bounces to the upside. And we are really referring to this market from a consistent perspective over the longer term. So just to let you know, we do apply certain rules to certain markets, and we really like the daily highs and the daily lows for their ability to be supportive of price or resistant of price, and we can trade moves off those levels quite nicely. But when you get moves that completely disrespect that level, break lower, false breakouts to the downside, again we've been seeing them all week really. For those of you that have been looking at this market, strong reversals, continuation to the upside, all above the daily low, all of that doesn't really interest us from a tradable opportunity. So really it's a case of just waiting for these markets to actually perform for us in a way in which we're comfortable trading these markets. And as you can see on a daily time frame, we're not ultimately filled with incredible confidence with this price action as things currently stand. Not quite as exaggerated move in the euro dollar, but largely effectively something similar. We've attempted to break lower, so that's why we were looking to see if this market could break below the 1542. We weren't able to see that break, and that level, or the 1547, which is the blue line on screen, became a level of support, and we got a bit of a reversal off that level. So we'll still continue to monitor that level, because if we do get a break of these levels to the downside, it would constitute a high probability sell trade. Just the markets don't really want to give us really good opportunities right now, and that's that's really what we can take from these markets. Are we surprised during the summer sessions that that's the case? No, we're not. So good afternoon, guys. Good to have you all on board. Do let me know, do post into your chat box actually if there's any markets that you have identified that you are trading. I know a couple of you yesterday were looking at a couple of other markets like the Aussie, was it the Aussie New Zealand potentially? There was a good trade in that. The Aussie, sorry, the Euro Oz. So look, we did get that extension in the end, pushing higher. It was a good breakout above the 57.25. We're getting extension. Let me see the high of this because the take profit yesterday. Okay, so the high is the 57.97. But you would have needed to have waited for that take profit, which I think was the 58.03 if I remember rightly. I think it was Philip. I'm not sure if he's on with us just yet. Hi Matt. Hi Corey. Yeah, Corey, we don't actively trade the DAX anymore. There is some issue with that being provided to some MetaTrader 4 platforms. Now it's in the process of being sorted out from what I gather, but it's been removed as a market for us to trade. But we've got all the other markets. We've got the CAC and the European stocks 50 as well to trade. So similar kind of price action, but apparently what I've been told is that a DAX is coming back online for us shortly. They're still in kind of negotiations, so not too sure what all that is about. So just going through these markets, we're seeing the pullback in the euro and the pound. Not overly comfortable with that. Not much has happened in the dollar yen, coming off the highs, looking like the yen is going to strengthen a little bit. Not much is happening in the dollar Swiss. The dollar has strengthened a little bit in the dollar CAD, but what this might present is some interesting opportunities tomorrow. If we get a break above today's daily high, which we're back inside the weekly low of the 30.50 level, this level could become a double bottom, and it might give us a nice intraday move, you know, maybe up to the 3100s level. So it would give us a nice opportunity for a little bit of a buy trade. However, we need to be patient today in terms of getting in on that. If I asked you what is the market conditions in which we're currently seeing, I wonder what your answers would be. Maybe do post it into your chat box. And the first thing we do when we assess a market for its tradability is assess its market conditions. And that for us is the fact that this market is consolidating. It is literally moving sideways and has done for the majority of the trading day. So yes, there is traders that trade sideways moving markets. That doesn't represent really high, strong tradable opportunities for us. So until we get the breakout below the 72.83 or a breakout above the 73.01, so we're only talking about a 20 pip range for the majority of the day. Yeah, I would agree, Matt. Market conditions equals shit. Yeah, it's a good way to put it. I must remember that. Yeah, that's one way of putting it for sure. Yeah, so consolidation is the phrase. We don't get high probabilities from them, unfortunately. In addition to that, so when we look at the daily time frame, we quite like the move. We called it last night, the 73.32 to sell this market below that level. We got a really strong explosive move. We weren't too interested in getting involved in that last night just because of the erratic sort of price action yesterday, the political turmoil and trade war talks and the FOMC and their fear of trade talks impacting the US economy, and it was just really sort of messy. Didn't really fancy it, to be fair. And kind of a tagline of ours is that if you're in doubt, you know, just stay out. There's always plenty of opportunities to try and capitalize on. So we did get the move during the Asian Open in the New Zealand dollar, but again we're kind of pulling back and we're largely moving sideways once more. So so we did get the kind of reversal off that level, and again we'd be looking for these markets to continue lower actually. So even tomorrow might give us a good opportunity to extend lower. The euro pound threatening to push higher, but that's really all it is. Not much follow through, not much going on in the euro yen, not much going on in the pound yen. And moving on to a couple of commodities. We're advocates of obviously the dollar strengthens, we can look for opportunities for the gold market to sell off. We actually got the technical sort of setup behind this market. We have just this descending level in here that has provided historical resistance, preventing prices from pushing lower. We did say we'd like this market to push up to the 1204 or 1205 level, and it very nearly did yesterday, and we're getting a rollover to the downside. So this was the second opportunity. We were looking at it this morning, potentially looking to sell below the 1190, and we didn't really get the opportunity that we would like to trade in that this morning. And we're currently above that level as we speak. So let's look at it on a 5-minute time frame. A strong structural failure to the upside off the descending level provided a lot of support on 2 occasions, and now we're actually pushing higher. So when we look at it on the daily time frame, so really just a messy week for us to trade. It just doesn't fit with any of the type of trades that we consistently like to trade. Just finishing off here, the oil market, the analysis. Again, we were anticipating a bit of selling to come in to the US oil, and we didn't get that either. Bounce off these levels, and we're currently sort of quite choppy. Price action pushing higher on the daily time frame, sort of a 50% reversal on the move. So no real follow through just yet. So indecision. If it stays like this and we get some continuation tomorrow below the 68.08 level, then we're likely to get at least a push down to the $67 level. So it might potentially still create an opportunity. Nothing happening in the S&P or the Dow Jones, and same situation for the Nasdaq. So the US equities, it'll be interesting to see you know, if there is any move at all today. That they're all threatening to push higher, but that's kind of all it is. Same situation for the FTSE and the stocks 50 as well in Europe, and the CAC, no real movement all day long, I'm afraid. So that is the market conditions. So let's now then, so sorry Matt, you're just suggesting the Aussie dollar for a short looks interesting. The problem we've got 2 problems. Is the actual trade was below the 73.32 level. That was the trade, that was the high probability trade beneath these 2 daily lows. That occurred in the early hours of this morning when we weren't at our trading desk and we didn't have a pending order placed in that market. But as you can see, the market hasn't moved an awful lot. It's been range bound all day long, effectively through the European Open, going into the to the dollar session. And when you say it looks interesting, would you be referring to, Matt, a breakout of this low? Is that the type of trade that you'd be suggesting? 72.83. You know, because I would absolutely concur with that. Yes, there is traders that will look to sell these levels from a high probability trading opportunity. Yes, they may actually be profitable trades, but we prefer the breakout with really long sideways moving price action and trade that breakout with a little bit of, give it a bit of room and hope we don't get one of those false breakouts where which you can get caught up on. Oh, get caught up in on occasion. So from a visual perspective, we do like this market lower. We've already experienced the move. That was the move. I think the level we were calling was the 73.32 level. So really strong move to the downside. Then we go sideways, and now we're looking for the next move to the downside. So actually agree, it's kind of the only trade that I think we would even consider this afternoon unless something else changes. So I just want to flick through these again. We're still getting sort of pullback in these levels. Nothing much going on really. So yeah, the only market that we might sort of focus on is if we get a bit of selling. The only problem we have with this is we like to see follow through in other markets, and we're not really seeing it. The dollar is strong against the yen, and it is strong against the CAD. And it was stronger against the euro, it was stronger against the pound, but all of that seems to be unraveling a little bit. So as you can see, the picture is a little bit mixed. It's a little bit unclear in terms of how we trade it. So the Aussie dollar then, kind of bouncing off these lows. I mean, we are only sort of 5 pips away from that, but it just shows you how little liquidity is in these markets. The only other thing, I don't know if you're with us this morning, Matt, something I'll just draw your attention to is if we just put in an average true range and just work with a 20 period, and I'm sure you're familiar, but an average true range just gives you the average range of the last 20 days, because we're looking at a daily time frame, and it gives you the average range from highs to lows during that period. And it gives you an answer of 55 pips is what this market normally moves in a day over the course of this month, or over the course of the last 4 weeks. But then when we look at the highs and lows of this market now, we look at the high of the 73.56 and we look at the low of the 72.83. Then what you can see is we've already seen a 70 pip move in this market. So that's why the reality is, if you wanted to experience a 30-40 pip move, it was back at 73.32. Again, the timing, you know, if you're not at your desk to execute the trades, obviously you just have to watch it and let it fly past. So the next level now would be continuation tomorrow below the 72.83. It's pretty nice sort of price action. We're getting the move lower, we've pulled back. So we're always talking about these markets selling off, and eventually today we've got the sell-off. The fact that it's sort of August, you know, we're not jumping at the bit to get into, you know, these moves and place loads of pending orders in these markets and things. Look at the sort of the decline really over the last month in terms of volume on a daily basis. The volume's really come out of the market. Summer trading conditions, and then when you get your bankers coming back to their trading desks, and all your financial institutions, your insurance companies, and your hedge funds, then you start seeing more liquidity in these markets, more volatility, bigger moves. I suppose these support and resistance levels stack up even more because you have more people focusing on them and more people trading them. Less likely for these markets to be manipulated by a relatively small number of people. So that's what we want to see. Plus we're easing ourselves back in at 2 trading conditions as well. So that's the Aussie dollar. So I'm sorry to say, but this might not be the most of exciting trading sessions ever. And even if we do get a break, you know, if we're still pulling back like we're seeing here in these markets, you know, elsewhere, then I'm not filled with that much confidence to be putting our capital on the line, to be perfectly honest. So yes, a relatively small flush lower we might see and might get, but because we've already had a 70-80 pip move in this market with the average is 55, we've already exceeded that. So if we get in, it might be a 10, 15, 20 pip winner, you know, at absolute most. So it just depends whether you think it's worthwhile putting in the time and the effort for that, which is relatively probably unproductive effectively. Yeah, CW, is this Connor? It is. I assume it probably is. Good question, Connor. If it is Connor, I'm sure it is. So do let me know if I'm speaking to Connor or not. But how do you access the volume in the market? Well, we can do so. There's indicators that can be used to tell you something that we can see on our trading screens. So let's zoom right in then, and we'll just look at this bit of price action here. I'll tell you what we might do. We might get rid of a couple of these levels. And we're looking at this price action, and it's a good question. Yeah, great, Connor. Okay, good. So how do we see volume in a market? Well, the volume is just the range of trading activity in a certain period. So when we look at daily time frames, we can see how much these markets have moved over a period of time. So, and if we divide it into days, we can see and capitalize on some of the, we can very clearly see those markets which have seen strong directional volume in a certain direction. So if we look at all of these candlesticks, this is one of the reasons why we quite like trading and working with Japanese candlesticks, is because we can physically see the volume in the market. So we can see that from high to low, we get a really strong explosive move. Now, we're talking about excessive ranges, which stand out, which give us real kind of strong indications in terms of what is going on with these markets, who is firmly in control of each of these moves. And if we just identify the largest ranges in this market, not really thinking too hard about this, you can do some technical analysis, and although there's some green trades, green candlesticks in there, if you do your observations, you can clearly tell that not only is this market in a downward move, but most of the volume based candlesticks are to the downside. So let's say we got 1, 2, 3, 4, 5, maybe you could include that one, but then there's a lot of sort of like-minded candlesticks, 6, 7. So we've got 7 significant volume-based candlesticks to the downside, and we've got 1, 2, 3 to the upside. So what it does is it allows us to understand, you know, who is largely in control of this market, and it's another tool that can be used, and it's purely visual. So you can see and identify the larger ranges, which means more volume into these markets, more directional volume, and it's quite supportive of the overall trend. So with all of these candlesticks, if you happen to be trading the trend and you can do your analysis, you can capitalize on all of these moves. So really, volume for us, yes, you could use an indicator to tell you the same information, but we're looking for the stronger moves. It tells you who's in control of these markets, because if we looked at this candlestick here, over the course of that day, the sellers have completely blown the buyers out of the water in this market. And the likelihood is on this close is we're going to get continuation the following day. So if you can identify volume in these markets, if you can identify who's in control, all you're doing is stacking the odds in your favor. And we can do so visually, and we kind of do pride ourselves on kind of simplifying these markets. And we do appreciate that there is many trading educators out there, and if you look at a trading screen, you probably need a master's in finance to even try to begin to work out what is going on in these markets. We don't feel the need for an awful lot of that, although depending on who's conducting the live trade room for us, each individual trader likes their own kind of indicators that can help them and assist them in making decisions. But that's why today's candlestick, the volume is very much to the downside. Sellers are in control, which is really why we are looking to sell this market, and ideally below today's daily, yesterday's and Tuesday's daily low was the high probability trade to the downside. So I hope that's kind of answered your question. Yeah, and how do you access it is just by visually identifying. You can do so very easily. And really you want to try and go with the volume, you want to go with the market, you want to go with the trend, and if you can identify all these things, yes, that is pretty choppy, sideways moving price action. But you know, we were able to clarify all of that pretty easily by just drawing these two levels, and we weren't interested in that, but we were on holiday at the time, and I remember seeing it on my phone, and we should have, I mean, in hindsight, we would have got into it. It would have been a bit of a no-brainer trade, but we obviously weren't at our trading desks and decided not to trade it really with the company capital. So we wanted to take a little bit of a break as well. But that was the breakout to the downside. And then if we go into today's price action, we're seeing exactly the same bit of price action here, spread over over today's trading, just moving sideways, which is really why we look to trade breakouts. So we're getting a mirror image view, and this is what technical analysis is all about, is just stacking the odds in your favor. That's all it effectively is. But that's what this move was here a week or two ago, was just a breakout of consolidation to the downside, and you generally get momentum entering, and you get a nice strong impulsive move lower, which is what we saw, and we're seeing exactly the same now. Move sideways, impulsive move lower, and same yesterday, generally moving sideways, although it was very erratic. It was up and down quite a lot before we got the actual structured breakout below the 73.32. So yesterday was sort of fairly miserable trading conditions really, and then we got the strong breakout. So what we're likely to see again is choppy sideways moving price action followed by the next level down. So I'm sure you guys see a lot of price action that moves in this way before you get the strong move lower, and then you just get sort of again erratic stuff like this, and then you just get, so if you get the directional bias right and you can be nice and patient and you can do your technical analysis, you could look to capitalize on these explosive moves time after time and keep trading them. As long as the market is moving in your favor, keep trading them. No need not to. So you can do your analysis in this way, and depending what time frame you're trading, this analysis stacks up on all time frames, so you'll see similar bits of price action. So that's why I trade beneath that level is worth trading. I have highlighted the risks with it in terms of the you know, these markets effectively exhausting themselves and not seeing the continuation that we would ordinarily like. So that's the issue we have with the Aussie dollar. But we'll continue to look at it. I don't think there's any other trades, guys, but you know, do let me know if there is other. Okay, great stuff. So look, good question, very good question. Okay, so look, as we look at these markets, just classical summer markets, we'll have a quick flick through. As you can see, there's very little appetite for price moves. They've all really occurred during the Asian session. Not much movement apart from reversals, which is obviously not what we want to see. Bit of strength coming into the euro potentially, but to call that strength is a bit difficult. Something that's worth doing, which is something that we do online and we take for granted, is our multi-time frame analysis. An important part of a trader's toolkit, or it should be. If you can imagine, if you're exclusively operating at this level, you may or may not understand what's going on in bigger time frames. Whereas if you zoom back and you can see, this is why we want to trade the trend. We want to be selling this market. This is why over the last 4 days we weren't interested in buying it, and that's only because we know what kind of traders we are, and we're quite happy to wait for those moves and not be buying and selling every market that we look at. So understanding the market conditions, which are quite choppy at the moment, and having a directional bias for us is a really fundamental part of trade selection. There's so many markets to choose from. I'm sure you've probably experienced this yourself. How do we possibly decide which markets we need to focus on? Well, if you know the market conditions and you have a directional bias, then all of a sudden that decision-making process can become a little bit easier. So hopefully that makes a little bit of sense. So as a result, one of the pillars that we stress all the time is patience, and a move like this, we just have to be super patient and then look to capitalize on the price movement when we get it. It's just the fact that we're trading summer markets, so if we are trading, we're trading less than perhaps our minimum. That's okay, but that's certainly what we'd recommend right now, just to ease yourself back into it. But as these traders start coming back on live, you'll start seeing trading volumes increase. So Connor, you'll start seeing more significant bullish and bearish candlesticks, and you'll see the volume extending, and you'll then know who's in control of that market, and you can make a decision as to whether you want to jump on board or buy and sell that particular market. Yeah, Connor, we can look at other markets as well. Aussie Swiss. Let's have a look at the Aussie Swiss. So extending lower. Market conditions. Consolidating. Mind you, a break below these levels, in fact. And when we put these lines in, people, we've obviously had traders previously that have, really look at these levels and be incredibly precise. And really, that's not what these levels are designed to do. They're supposed to be areas in which you can navigate these markets. So, okay, let me zoom in here just a little bit. Okay. So what we do have is an additional structural failure, and it's actually a nice trade idea. There's more recent support in and around this level. We had a strong break to the downside, a pull back to this level, and then we had an extension lower. So a no-brainer trade in this market on Monday. after Monday night's trading, and we've had a really strong extended move lower, and this is where the markets, we have the initial breakout, so there's an opportunity to sell it for the first time, and then if you're patient for the pullback, you can then capitalize on the next leg to the downside, and that would have obviously been a profitable trade. And it's just cherry picking markets like that that is quite important. But there's been, there's been a significant amount of strength entering the Swiss franc recently, and the Aussie Swiss has kind of fallen into that category. So that's quite a technical setup, a really significant move. We're now at these levels where we're going to be running into support at the 71.46. So we're only sort of 15-20 pips away from that level, having extended considerably for the day. So again, if you can be patient and if you get a break below that particular level, then you can actively trade that. But and again, this is why we like sort of trading the daily lows. If you can be patient to wait for the daily lows, we would certainly be advocates of selling the 72.55. The next day we could look to sell the 72.47, which is only just below it. And yesterday we could be advocates of selling 72.13. So you could sell all these levels, and it's fairly easy for us to sort of identify those levels because we're looking at daily lows. But the levels just below it, we're only sort of 15 pips away really from this low. So we've already seen the significant move in this market already, with some potential support just below it. So do we tend to stick to the majors? Yes, we do, just because of often, from a fundamental perspective, it's easier to sort of monitor the news flow for the majors, for 7 major global markets, and we can identify one of the reasons why we look at the majors, which are all these markets here, is that they have one thing in common with them, with all of these markets, and that's the US dollar. So you can very easily gauge strength and weakness if you analyze these markets. So on occasion you could be right where you've just suggested trading the Aussie Swiss. So if the Aussie dollars move into the downside, and the Swiss would also be moving to the downside, then there's Swiss strength followed by Aussie weakness. So so what you could be looking to do in situations like this is you could go over to the Aussie Swiss chart and look to sell that particular market. So yes, we do focus on the majors for that reason. We also have a pretty decent handle on the news flow for these major markets, and you often get loads and loads of really high probability opportunities in these markets. These are the most frequently traded markets in the world. We want to trade that because we want the volume and the volatility to be entering these markets, and it gives us fantastic opportunities, and we don't need to look beyond these pairs really, or should I say these major currencies. So look, we are just extending lower in this market, so the Swiss is extending its move. Let's go and have a look at this on the dollar Swiss. So we did have a bit of a pullback today, and as you can see, that's unwinding. So if we look into the more recent time frame, we've had an extended lower. We're pulling back a little bit, and now we're just looking like we're going to potentially make the next move lower, but we'll obviously wait and see on that. So yeah, so really we're looking at volume, opportunities, reliable price action, and more inclined to get that if you largely focus on the major currencies rather than the minors or the exotic currencies, which of course you can trade, and there's some massive moves, there's some major devaluations as well out there. They're just a lot more erratic to trade. So that's one of the big things that Trump has about he's of the opinion that a lot of other countries manipulate their currency to give themselves, to assist their exports. Because obviously, if your currency is cheaper, you can buy more. More demand will come in, and everything's a lot more affordable in terms of purchasing products from that country. So it gives a little bit of a boost on a domestic basis. Okay, let's see the Aussie dollar. So we are getting that little break below. Okay, so we did get that little roll over to the downside, got the close below. So really selling in and around the 72, 79. Is the level. It's a tradable opportunity, of course it is. You could really work with the 72.90 odd as your stop loss. We are only effectively 3 pips below our ideal entry, so it's not a significant issue. But in terms of trading consistently, if you don't capitalize on the initial breakout, what you often get is the opportunity for this market to pull back to that level, and what that means is you could effectively get an opportunity to sell this market at a slightly higher price. So and then you also get a little bit of a structure, so you can keep your stop loss actually a lot lower. If we start getting in here now, we have to use this as a stop loss. That exposure is a lot more than something like this. So you've got to weigh up the pros and cons. We've already had a really strong move already today, coming from a much higher price. We're getting that extended move lower. So maybe just wait for the pullback if this is something you really want to take if you're not already in it. We'll see if we get some continuation. Let me just have a quick look at the euro dollar. Okay, so now we're getting a bit of a push against the CAD. We're getting a bit of selling coming back into the oil market. So they're kind of livening up just a little bit. Just a little bit. So what we'll do is we'll see how price behaves around these lows. We're not too eager to necessarily get into this, but if we get a nice strong pullback in this, we might look to get in at a slightly higher price. So what I'm doing now is, guys, I'm just... yeah, and risk reward is a big deal, and if sometimes it doesn't necessarily fit all the time with your view. We've already had a 75 pip move in this market already. We can add another 8 pips to that, so 80 plus pip move already today in a market that normally gives us 55 pips. So we're not too far away from doubling the normal range over the month. So so what we can do, guys, is North America waking up and finishing the first coffee. Yeah, you could be right. You really could be right. So It's 9 AM now in the East Coast, so you're absolutely right. They might start to want to get involved. But all the big players are not really at the desk right now. They certainly don't have any major view just yet. So you'll see the difference in trading conditions come early September. So now we're just getting very familiar with these markets, seeing if we can capitalize on some moves. We got into a couple of trades yesterday and just sat around them for far too long, really, without them making an additional move. So we're looking here like we're going to I wonder if we will make that move lower. So now we're extending lower. So all we're simply going to do with this market is, it's the only really market that we're interested in trading and selling, is to just wait patiently now for the pullback. It always comes, and if we get a nice pullback in this, then we know effectively we can have initial targets, which could be initially these lows, then it could be beyond those lows if we get a confirmed break of that move. So let's hope we get an opportunity to get into this and capitalize on the pullback. It's just extending lower as we're looking at these charts. And potentially a few things stacking up or potentially in the pipeline. So I'm just conscious of the time, guys. We're going to have to switch across to the live trade room. So for those of you that are perhaps new to our YouTube channel, we would like to extend the offer perhaps for you to join us at the live trade room. So do have a look at our website, www.TheLiveTradeRoom.com. We pride ourselves on offering traders a comprehensive education in live trading every day. There's an abundance of resources available for you, and we pride ourselves as well on making it as affordable as possible. That's quite important for us because we trade our own capital and we do very well off trading these markets, and we kind of want to share our knowledge and experience with you all. So really it's a very small price point, $9.99 if you decide to continue the access with us, but we're happy to give you 14 days free access to the live trade room so you can have a taste of it without any obligation of any kind. So the link is just below in the description. Please do like and share this recording. We'd appreciate if you could do that. And we'll have a look at this Aussie dollar trade. We're just extending lower as we speak. So really we can look to trade the pullback on this market. The good news is was that? Yes, of course. Please do hit the bell below, and what that will do is it will send you a reminder when we are live, so hopefully you can join us live through YouTube as well. Good shout. Okay, so so we'll switch across then to the live trade room right now. If you can hit that bell button below and do subscribe, that would be great. If you do want to search for us at any point, do search for The Live Trade Room, all one word, and you'll be able to find us pretty easily. And we're also available on Facebook, Instagram, Twitter, and LinkedIn. The details are there all on screen. Okay, so thank you as always for joining us. We will be switching across right now. So those of you from the Live Trade Room, we'll hopefully see you in just a minute or two. So from everyone here at the Live Trade Room, take care. We'll speak to you soon. Bye for now.